We are joined today by Jason Paltrowitz, Executive Vice President of Corporate Services at OTC Markets Group here in New York. Welcome, Jason.
Thank you.
Today we're discussing 12G32B. Jason, what is this? Why is it important for our international QX and OTCQB companies?
Thanks again, Cecilia. 12G32B is the SEC's foreign private issuer exemption. It's important because it allows companies that are listed outside of the United States to be able to have a market here, primarily on our QX and QB markets. What it basically says is that if you're a foreign private issuer in good standing on a foreign exchange, and you're meeting all the requirements of your local market exchange and regulator, so long as you make that information available to us in English so that it can be disseminated into the United States, you actually become exempt from having to be an SEC reporting issuer. This is a really important rule in that if you think of the companies on our QX market, Roche, Adidas, Heineken, Air Canada, all of these companies are listed outside of the US. Most of their trading volume and shareholders are outside of the US. They're all reporting in good standing to their local market regulators, whether it be in Canada or Switzerland or Germany or the UK. But they all want to be able to access US investors. And so the SEC wants to make sure that those US investors have access to the types of disclosure that's important for them to be able to make those investment decisions. But the SEC also recognizes that to ask companies like that to be duplicative and have to go through SEC reporting and SEC regulatory rules can be burdensome and costly. And so this exemption gives these issuers the ability to demonstrate, right, that they're in compliance, that they're disclosing adequately for investors, and to do it in such a way that alleviates the burden and extra cost, complexity, and risk that goes along with being an SEC reporting company in conjunction with their obligations in their home market. And so we see issuers from all over the world avail themselves of this exemption, again, in order to be able to demonstrate that they're in compliance with securities laws in their home country, in the US, but doing it in a way that's much more efficient than having to have a US regulatory regime alongside their home market regulatory regime.
Thank you, Jason.